Yo, what's up, guys? It's your boy Looney. Today, we're diving into three sectors I think have huge potential in 2025. It's going to be fintech, healthcare, and space tech. I'll break down my favorite stock in each, what makes them exciting, and how I'm personally playing them this year. But before we jump in, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month that gives you access to one-on-one coaching, trade callouts, my full option selling course, giveaways, and more. All the links are in the description. So let's start with fintech. And let me pull up the stock because that stock is SoFi. And this is one of the hottest areas in the market right now. My pick here again is SoFi. It's been transforming how people handle money, from banking and investing to loans and credit cards, and it's all built into one sleek platform. The company just hit profitability, is growing deposits, and is adding new products every quarter or every year. Now, the stock did pull back recently, but for me, I look at that as an opportunity. Fintech tends to lead early in new bull markets, and SoFi has one of the cleanest balance sheets in the space. So how am I planning my position? Because I already own 400 shares, takes up 20% of my portfolio. My strategy is not going all in. I'm just simply doing small trades. Now, if I didn't own SoFi, yes, I would probably be doing small purchases, doing dollar cost average. But because I own SoFi, I'm simply doing small trades. So if SoFi pulls back and I lose money on some of these trades, that's fine, because long term I see growth in SoFi, and if it does continue to dip, then I'm not going to not only trade, but I'm actually going to actively buy shares of SoFi. So I'd rather be in a situation where I lose money or make profit on these defined risks, on these trades like credit spreads or debit spreads as well, then be in a situation where I hold shares of SoFi at $25 and then it goes down to $15, somewhere around there, where I'd be more intrigued to buy those shares at that price. Now, what would happen if it went to 15? I would probably buy shares. So that's why that is my strategy with doing these trades. And how should you be doing it if you don't own SoFi? I would recommend doing the dollar cost average, not going all in, maybe even set up some smaller trades as well. I give these trades to my premium Discord. So this is some examples. I have covered calls that are more of the hedging to the downside. And I also have the debit spreads and call credit spreads to the upside. But one thing before I wanted to actually mention, because I forgot to, is they just recently announced option or level 1 option trading on their platform. So that's pretty exciting. I'm sure they're going to enhance that more and build on that as well. Now, let's look at the second stock. And let me pull it up before I discuss it, and that's HIMS. My pick here is HIMS because it's disrupting traditional healthcare with an online first model that's all about accessibility and privacy. They've gone from selling men's wellness products to mental health, weight loss, and even prescription care all through their platform. So revenue growth has been strong, margins are improving, and they are profitable as well, which is a huge milestone for a growing company. Now, it's not the flashiest stock, but it works. So on a long-term basis, it's consistent, and consistency will matter when volatility picks up. Because this stock has seen that volatility. It's definitely a volatile stock. We could see in the past year how much it shoots up and how much it shoots down. So same idea with SoFi. I wouldn't be buying heavy, but there is a lot of room to the outside. On the technical chart, there's actually a lot of support line and heading into a bullish momentum. But on the fundamental side, this company is growing. It is facing a lot of headwinds with ACA subsidies and even Trump opening up his own prescription company style that might compete with this. But that's all part of the game. Companies and industries go through that competitiveness with the industry and other companies. So I'm not too concerned on the long-term basis. Now, short-term, what would you be doing? like I said, what SoFi is doing that dollar cost average. I am buying shares actively, and I try to do it on red days or when there's a opportunity. So you can see pretty recently, I bought it at $53 the other day, and it's actually trading lower. So maybe I'll buy more, maybe not. We'll see. I'm not making major buys. You can see I bought it at the $51, the 55 and 57. So very small purchases, not major ones. I do want 100 shares. I want to build this position up. I want to grow it over time because this is a long-term play. And yeah, that's what my plan is. I'm already up 19%, so not massive returns, but overall, I do see the growth potential. Now, this is a smaller position in my portfolio, and this is definitely, I would say, the most speculative just because of how volatile it's been in the past month and just recently, and that is ASTS, and it's in the space tech. And this company is building satellites that connect directly to your phone, no Wi-Fi, no cell towers, just satellite to cell communication. They've already completed live test calls, and they're working with AT&T, Vodafone, and they're moving closer to some more commercial rollout. Now, I would still say they're in early stage. It is risky, it is volatile, but the upside is massive. And if they scale this globally, they could completely redefine mobile connectivity. So yes, this is a small part of my portfolio, somewhere at the 1%, and I'm holding this for long term as well. And is this a buying opportunity? I wouldn't say it's a buying opportunity, but I would definitely add this stock to your watch list, and it has shot up major amounts, 57%, but for good reason. It is a strong company. It's not just hype driven. And yeah, past year, it is up 183%. So maybe wait for a pullback to actually buy this stock, but I would definitely put it on your radar as well, or that is exactly what I'm doing. And I'm not buying heavy as well, but I do buy shares when I see some opportunity. I'm buying it in the $40 range, somewhere around there. And we'll see, maybe I'll buy it in the $50 range. Going to see where this market heads because we are in a bull market. So pretty much every stock is really doing well. So it's hard to see where this stock will trade in the bear market. And that's why I'm not buying heavy, but I do have this stock. I do plan to keep building it, and I will probably trade it if there's some opportunity. There's not really any opportunity, at least recently, just because of how much it shot up. Past week, it's up 37%. So yes, the stock is growing. Yes, it is volatile, and that's why it's only 1%. But this is a stock that I'm definitely trying to build out. Now, just to recap everything, and that was Fintech. Fintech was the first stock I went over. It was SoFi and modern banking, and it showed strong growth. The second sector was HIMSS. HIMSS is in the healthcare, and it's steady expansion in that telehealth products. Now, space tech, this one's a little bit more of a speculative play, and that's ASTS, high-risk innovation play with global potential. So each sector serves a different purpose, stability, growth, and upside. And together, they can give you exposure to where the next big market trends might come from. Until next time, peace.